The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and sorry for the delay, but everything's set and we're ready to go. So we're looking at a Dow that's down 208 at 17,000. S&P is down 24 at 1973. The comp index disappeared. Comp index is down 75 at 4480. We've got gold unchanged and silver is the same, and you've got copper. I want to see what copper is. Copper's down below. It's right at 302. Wow. Watching copper closely. Bonds are up 24.30 seconds at 137 and 19.30 seconds. And the dollar is, since I just got in, I don't know. I'm going to see where it is. It was screaming last night, and it's up. It's at 85.16. It's in leg G/C. This is going to be so very interesting. Why? Because here's a couple of things. For me, it was all about that peak E that was made in the Chapman wave methodology right at that resistance, what I call the inside track. That inside track shows a trend line that was rising, and then it shows a dashed trend line, a little red trend line. If you're looking at Tiger TV, you'll be able to see this. And that inside track is where the price is inevitably, there's a chance that that's where it's going to be repelled. Propelled or repelled? Propelled at the bottom if it holds, repelled at the top if it fails. And that is what we saw in that leg E. I called it a Chapman wave, rogue wave. This is what I show my subscribers every day. I show the Dow daily chart. I give an explanation of what's going on. I draw in the important trend lines of that moment. They can change. Of course, things can change. But what was most important is that we were looking at that resistance line and that support line. And the 9-period exponential moving average, the maroon line. And one of the reasons why I'd said over the past week that we had gone short, the most short that we've been in a very long time. And in fact, we added to the short this morning because what I'd said was, I can't remember if I've got it written down here. I think I said, let me just double check. It was to the effect that we wanted to go short one of the Dow inverted instruments, 200, 300% short. That is based, it means that the subscribers can actually go long a position in their IRAs, etc. They don't have to worry about being short if they're not allowed to be short, or if they're just afraid to go short. So you can buy it because the position itself is a short position. It is made up of selling, and that's what we wanted. And what I said was 300% short the Dow. This is number 2 on our list of 15 different bullet points. And what I said was 300% short the Dow, the SDOW, buy if the Dow is 17,170 using a $1 stop. So I'm not even sure how that position played out, but that's what I was looking at. And one of the reasons is, when I did my homework, when I looked at the Dow 120-minute chart, there's a pattern that I like to talk about. It is the H pattern, or the single leg A failure pattern. And everything about yesterday's move, and I said that for my subscribers, I said that there was a chance that yesterday, well, the title of my in fact, maybe I'll just show it here. I think that's even easier. These are the positions we have. This is what my subscribers get every day. Now, of course, by the end of the day, we could be up 200. You never know in this market. But here it is. And basically what I said was, in my Traders Corner, this is my service called the Opening Call. You can get it 2 weeks free. Go to the front page of TFNN. Most importantly, what I said is, Traders Corner, strong rally, felt like a strong short squeeze. But it certainly was a lot stronger than Tuesday's entire down candle. Look at that candle. And look at the candle of yesterday. With the IBB leading the Qs higher, thus dragging all the other indices up, we need to focus on the IBB closely. The weight of evidence at this time still favors the sell mode. But a new high negates that aspect. Wow, I didn't even have a chance to proofread it because I was off early this morning. I didn't have a chance to proof, and a lot of word mistakes here, but not the gist of what we're looking at. And here are all our positions, only short positions. We have no long positions. We do have long positions in the sense that the positions that we have are either short certain stocks, or we are long positions that are made up of ETFs or ETNs that are in fact short. So one of them I see is up 11%. That's good. Now, let me do a couple of things here, because this is very important. I want to show you that the dollar has extended. And if I do the Chapman wave methodology and I go to the low bar right there of the 120-minute chart, and I merely count each successively higher peak, I get a peak A. And look, that's an A, but it's below 84.76. And the 84.76 is, in fact, this is the dollar index. That is the high that was made at 13.15. That's 1:15 in the afternoon of the 23rd. And then it pulled back and it went sideways. And then it had another little pop-up, but it only went to 84.75. Pulls back, has another pop-up, but that only goes to 84.74. And then what happens, that is a cumulative move to the upside, a power move, like a restart that I call in the Chapman wave methodology, and whoop, it goes above that 84.76 level and goes to leg B. So this becomes leg B. That's the simplicity of this technique. Is just, I have people just constantly saying, how on earth did the Qs finally get to D? How on the daily chart? How on earth did the composite index, which looked certain that it wasn't going to make a D, it was going to go to a peak C1 and a C2, which is almost the equivalent of that, finally sneak up and go to that D. So now the dollar index is in leg C, and then it goes to peak C. Now the big question is, at 82% in the stochastic, and the MACD turning down, is there enough strength to still go to a D? Am I going to have to call this right here a C1?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and the Dow is down 215, S&P's down 25. Don't forget, I think this is the last hour or so that you've got, half hour maybe, that you've got to sign up for this fantastic Nadex $12,000. $10,000 in prizes. Check it out, front page of TFN. It is an amazing gesture of trust in the platform, as well as in all of you having a chance to enter and to learn a new technique at the same time as possibly winning some prizes. It's fantastic. So we've got the TLT in leg D right now, and that's going to be very important because what I had said to subscribers was that over that 1570s, resist 115.50 to 115.70s. That's going to be very important because that's a 200-period exponential moving average. In the daily, if we can turn that into support, sorry, that's the 120-minute chart, but the daily has got that silent doji low bar, the kiss next door to it. In other words, it went down to a low of 112.73 on the 17th, and then very quietly makes a little doji, I call it the silent doji, on the 18th, and then breaks out on the 19th. And look what's happened. This is still leg A. And what we're looking at is just the potential, we don't know yet, but the potential for one of those patterns that I call the falling axe. That is, where you've got a declining cone, and from the declining cone, you get a breakout, which can give you a 1-to-1 on the upside. But we've seen that this, in fact, could be 2 and then 3 times to the upside. We just don't know yet, but that's bonds. And what's really important is I made a big deal about how the IYT had made a peak F Chapman wave top in the daily chart about 5 or 6 sessions ago. There was an E in the 120-minute chart, and most importantly is that the decline coincides with an alternate count in the weekly chart, but it's not the alternate count that was important. It was this technique that I developed many years ago that I call, look, here it is, I'll make it a little darker. Let's call that green, and I'll make this red. I'll make it pink so that you can see a difference. And this pink line I'm going to make nice and thick just for the moment, or make it really thick. You see how a trend line, learning how to use a trend line can make such a difference? Look at that trend line. Look at that resistance. How does the chart know that that is resistance? Well, in this particular instance, what we're looking at is that every time the price has gone to that high of that trend line, within that space that I call the inside track, if it breaks out decisively, that green line, I can go back to making it green, and I'll make it nice and thick. That green line can become a breakout area. That green line says, whoa, we've turned this whole area into support. We're closing up in the highs of all-time new territory. And that would be very important. So what I'm looking at here is there's another pattern that I don't often talk about, but I do for subscribers, and that is the the rising wedge formation, where the prices are going up, but the distance between each pullback and the new highs has a rising trend line. When that's concluded, very often what happens is you get something like this. You get a U-shaped pattern or a cup pattern, and that cup pattern can either go back to retest the top, or it becomes a right shoulder failure. And that says that if the transportation, the IYT ETF, iShares, goes somewhere, it's at 150. If it goes into the 148 area, 147, it could then have a nice bounce, and that bounce, the way I'm looking at it, is probably going to fail, and it's going to retest lower lows. That is, if I'm correct in saying that my impression of the market at this particular point is that we're due consolidation, number one. Number two is I made a big deal over the last few days. I had an email from someone who really tries to keep me on track, and some of us other guests, hosts on TFNN, and he said, "Can't flop tomorrow. You're all in on the bear side," and a smiley face with a wink. And yeah, I respect that. I want to be put. I want, you put my fires to my feet to the coal, to the fire. My technique should be good enough to the veracity, the number of times over the 20, 30 years that I've been using, or over 20 years that I've been using the Chapman Wave methodology, should in fact give you some kind of sense of a trend, and that's really what the Chapman Wave tries to do all the time. I did not get a sense at all of whether or not, other than the daily chart was going to give it, of whether the Dow was going to break down. We still don't know. We've got another day to go before the end of the week. We've got another 3 days to go, 3.5 days to go before the end of the month. And basically what I've got, I need to find that other chart. It's just a little bit cleaner for the Dow. I want to use it, so I'll find it right here. Weekly. It's not there. We've got a break coming up. I can hear the music, so I don't want to talk through the break. Folks, I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's out 190, S&P's down 23. And I'll be
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. We're going to go to Dan in Basking Ridge just in a moment. I just wanted to show you down 208 in the Dow. One of the reasons why I've spent so much time on this weekly chart and said I have not yet, even now I haven't got a signal on the weekly chart of the Dow. Not only that do I not have a signal, but there's a chance that I have to rename a count right over there, the count with the Dow on the 2nd of May at 16,620.06, and the next day 16,622.95 is a potential. I really hate doing it, but I need to know that the chart pattern fits a method for me to be really aware of the possibilities of both sides of the coin, up and down. And if I do that, what happens, I get my peak C there, where C is right now, I get a D. Then I've got an instant restart, and that is the technique that I spend so much time on when I do my Master Trader series, especially the level 2, where I discuss the Chapman Wave flat base restart. And that flat base restart says that you can go below the original low after a peak D in an instant restart. It's called an unconventional Chapman Wave flat base restart. And that will give you that technique that I talked about, the one that I spent a lot of time when I was long all that period in 2008. And then there was that sharp pullback. Everyone thought that's it. And I said, I've got an unmet series of highs to come in the weekly chart. I don't know what's going on, but I have to stay along until I got that E and F, and this could become the E and F if, in fact, the stochastic pulls back sharply, the MACD deflects much lower. So that's the alternate count. I don't have to use it right now. I'm just talking about it because there are so many people that email me about the different wave counts and they're using Chapman Wave, and I need to be as clear as possible for those that are actually utilizing it. So I just want to make sure that by Friday I'll have a little more information, and by certainly early next week I'm going to make some decision about that if I need to. I don't need to right now. Not only that, I got Dan on the line. We want to go straight to Dan. Dan, I'm sorry for keeping you on hold. What's your question?
Well, you're worth the wait, Basil.
Oh, good. Thank you. You mean W-E-I-G-H-T?
Hey, Basil, I was
yes.
calling on IBB because it actually looked like it hit it broke the last high of like 278.
and it went to a D in the weekly.
And so it's like a key reversal today. I have 270 October puts on this.
Okay, so are these the ones that you've been holding, or you just got them?
No, I had these right here about this price point, but, it's eroded on the time value. I've had them for a few weeks.
So what happened is they look good, they look lousy, they look good, and then yesterday they looked terrible for a moment. Just they're not bad, but they look terrible in relation to what they were. So this is what I'm going to recommend. I believe I'm finally getting a signal in the IBB, and of course in my opening call we were long the inverted short position. We got out of it, I can't remember now, I think it was just a 1.4% or something loss, or 1.2, very, very small loss, especially for that kind of instrument. But most importantly, excuse me, what I'm looking at now, and I'm not sure that I'm going to be able to get into it because this is the most positions we've been on the short side for, I couldn't even remember how long. I just don't want to overdo it. I have a rule of thumb. When I've got 6 positions, maybe I can go to 7, and now it works that it doesn't matter even if they mix long and short, but at that particular point, I don't know what the reason is, but it invariably creates some kind of a top in the market. So I don't want to overdo this. What I'm looking at here is that the IBB 120-minute chart, now this is going to be really interesting, made a peak D. And, of course, in the Chapman wave, what do we look for? We look for D. Can go to an E, even an F, but D is where you want to be careful. And right here at this particular D, with a candle that's been made in the first 1.5 hours of trading today, has the stochastic back down at 73%. NACD hasn't crossed negative yet. It's toying with the 9-period moving average of 275. The IBB, which is the iShares Nasdaq Biotech ETF, is at 274.79. And this is my thinking right now, is that the IBB had some unfulfilled upside action. And one of the things that I was looking at, I had a chance last night just to glance at it, but I couldn't really follow through, was BIIB, which is Biogen IDEC. It's still showing residual strength, which allows it to, it's heavily weighted in the IBB as well as the BBHs. And as such, it says, I can hold up a little bit better. I can hold the sector up a little bit better because I'm up at the higher level, and I haven't really given too many signals in the price. But when I look closely, the monthly chart, I'm going to leave for now until Tuesday's close, but I'm going to say, as it stands right now, it is really close to starting to turn down. That's not good enough, really close. The 120-minute chart, the weekly chart has made a peak D, has not been able to break above 300. There was a 349 round number high. There was a 359.89 all-time high back in March of this year, and then it pulled back to 270-something. That's a big, big move down. And now it's in this choppy rectangle range. So that's a stock that's helping hold up the general market. You've got Amgen, which is beginning. It's in leg E or F. E. Oh my goodness! It's an E in the weekly chart. It's an E with a doji possible candle in the monthly. I'm looking at, when I went through just a few of them that I have time for, my thinking was that today was an all-important day. Everything about it said, I thought that the best case would be that there'd be a narrow close, and then tomorrow we would get a very sharp pullback. Instead, it did it all in one shot. Came back. I didn't expect that we would be down 200 points, but in fact, that's exactly what I wanted to see because of our positions. Here's my recommendation. I would recommend that you stay in the position. I don't know if you want to add to it at all, but I think right now, because it's being choppy up and down, I would say to you, why don't you wait a day or two? Because if we can get a sense of where the weekly closes, if it closes close to 267, I know that you'd be losing what is that? 7 points almost. 7 points in the option arena. That's a lot of points because it would be translating to about 75 cents or so, maybe even a little bit more. But I really think that there's just enough residual strength in the IBB not to add unless you do something that's really very specific to the action that we're looking at right now. And that is to say, I'm going to add another position, but this is the position that I'm prepared to take off very quickly. If that's the case, because I know you like to hold it getting closer and closer to the time.
Yeah, I would actually, I don't know if I would go into October, but I guess I could look at the November.
Okay, now if you're looking further out to November, to my thinking, it's really October that's going to be most important. But absolutely, if you're looking to November, I would then prefer to not take the risk of going far out to a 264 or something. If you can, get a little bit less and get closer in the money, because those will really kick in later on if this is starting to trade at 262 and you're already in the money, because it'll give you enough time to be looking at other things. But that's one way to look at it. Now, let me just be really clear. There's residual strength, and fund managers are still going to gravitate towards the IBB until it really cracks all that support in the 262 or higher area. When, or if, I think it's when, not if, but when the IBB cracks 262 on a closing basis on the weekly chart, that monthly 250 9-period exponential moving average, the price is at 250 of the 9-period moving average, is going to become a magnet. So looking out, I think that's the way to look at it. Now, let me just say real clearly, because I want this, I need to reinforce something. When I'm looking at the, here we go. When I'm looking at the weekly chart of the Dow, when I'm looking at the weekly chart of the S&P, when I'm looking at the weekly chart of the IBB, any of the sectors, the SMHs, semiconductor index, which we're actually short, but I believe if everything worked out okay, the SMHs, everything about these charts suggests that there should be a very sharp pullback. But the one thing that I'm going to throw out here, because I have not yet had any confirmation, is that if this is really leg B going to peak B, I see no chance tomorrow of breaking 17,350 on the Dow. So this is probably going to be B. I can't even say B/anything right now, other than to say if the notation that I was just talking about is correct, and this is A, B, C, this could be, in fact, a brand new D in the weekly chart if I use that alternate count, what I call the phantom peak. I don't want to go there yet, other than to say that everything about the weekly chart, the MACD, the stochastic, same as the S&P. S&P actually has a much weaker MACD and stochastic. Everything about it suggests to me that this is that double hump that I always talk about, double hump, camel hump. This is that right shoulder of the stochastic that tried to rally and will fail, and that the MACD has in fact deflected lower, showing much, much greater internal weakness. So that IBB has been the leader, and even yesterday was a leader by going to all-time highs when the S&P I don't think went, no. None of the indexes went to all-time highs yesterday. So only the IBB, and that says that the fund managers are going to be reluctant to sell. When they do sell, and I believe they will be selling if the market continues lower, if they do sell, your IBB puts are going to look fantastic. But I'm just saying, let's handle it for money management purposes with a lot of respect, because we saw yesterday how powerful it can be if it suddenly explodes to the upside. So I hope that helps you, Dan, but I think that you're in the right position. All I wanted to say to you is that I know that you like to look out, and if you were looking out, I would probably want you, for safety's sake, to get more in the money puts going to November than out the money. Because if it starts to kick in, later on you'll have enough money to say, you know what, I'm just going to throw out a number on the IBB and say, if it hits, it's great. That's just a risk. I don't want you to be taking too many risks right now, because we've seen how quickly money comes in, and if I'm looking at it just brutally honestly right now, I'm looking at it, I'm saying, hey, what are you talking about selling it? There's a long-legged doji right now in the weekly. It went very quickly from C to G. That's always a warning to be a little careful. But the 9-period moving average is at 267, and it's way above there. What are you talking about? The MACD is still good, not great, but good. Stochastics at 83%. I'm doing the internal structure, and I'm saying these are the things that I'm looking at if I look out and certain levels are broken. So I hope that helps you.
Yes, it does. Thank you, Basil.
Thank you so much for calling, and good luck with the trade. So far, it's starting to work again. So now, folks, let's just do this because we've got one segment coming up. We've got a break before that. I want you please to go to the front page of the TFNN. Check out that NASDAQ competition. It is just, it's called the virtual trading competition, but it's really, you're being paid for education. Just another way of looking at the markets. If you use short-term trading methodology, you can use like the Chapman wave, go A, B, C, D. You can do a whole bunch of things. What I want you to do right now is I want you to grab this particular chart here, and I want you to show you something. I haven't looked at it at all. I've just come in, so I'm going to go to the VIX. Now, the VIX has gone from a low this morning of 13.24. I'd say that if the volatility index goes into the high 15s, you gotta respect that. But it's not good enough just going to the high 15s, low 16s. It's how it holds. Yesterday it took quite a hit to the downside, but look how it sprung back. And I'm looking at this and I'm saying, wow, if on the 10-minute chart, this is leg A, we had exactly the same yesterday on the ES, on the E-mini. Look, I was right here. I can't remember. I think I showed it in the, I did show it in the den, but I showed it early and then I showed it much later on. Look at the strong leg A. And then it went B. It went to a left side, right side price time match. This is remarkable. And then what did it do? It went all the way to a C and then finally to a D just before the close at 3:30 in the afternoon. But wait a minute. Look at the volatility index. Isn't this now looking like the same thing? And now it could take a little longer while it digests this big gain. And if that VIX index, I can tell you right now, if this VIX index started out is it's a sentiment indicator, and that can change on a dime. But if this breaks above 15.92, goes to 15.93, especially if it goes and trades in the 16s, what you'd be looking at here is a situation that two things can happen. One is you've got a one-to-one expansion. That's an outside chance. But in the meantime, back at the round, call this wave one of Elliott wave. And now you're getting your sideways zigzag. Wait a minute. If this really is going to work, just make it real simple. I've been saying this for months, not weeks, but months. If the volatility index starts to rise and makes higher highs and higher lows, and then starts trading in the 16s, high 15s to the 16s, and then turns that into a base on its way to 19, but especially 20, this market has no upside at all other than pops. It's going to make lower lows and lower highs. And I've made it as
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. We are back. And Basil Chapman here, Tiger Technicians out. Please check out my service, my daily service called The Opening Call, 2 weeks free. This is a perfect time for it. And if you have a portfolio and you really want someone just to be able to guide you through the trends, I believe that the Chapman Wave methodology is, so far, it's most often proved itself to be able to do that. But the bigger trend is that weekly trend, and that's going to be coming up. I probably will, I don't know if I'll have time next week, but very soon I'm going to do some kind of report showing the outlook, looking out, and I'm going to try to put together with my Market Watch, the Trends Watch section, where I talk about skyscrapers and ads and $250 million apartments, things like that, and what's going to constitute the major top and how this particular phase should unfold. Berkshire Hathaway is a real good example of the economy actually doing pretty well, because it made a high of 142. This is the B shares, but it made a peak D top with the technicals not confirming. And that's not a good sign. It's at a 138 down, $1.95 today, and it's a potential peak D in the weekly chart. This is going to be really important. And boy, I don't even want to say it, but it might be a leg F in the Chapman Wave stalk leg formation in the monthly chart. So we've got to be watching a lot of things very carefully. All I can say is that step by step, we've been trying to do this, trying to time, trying to time the market, trying to predict the market, and we've been able to do that. So we've got to be watching a lot of things very carefully. All I can say is that step by step, we've been trying to do this, trying to predict the market, and we've been able to do that. So we've got to be watching a lot of things very carefully. All I can say is that step by step, we've been trying to do this, trying to time a top, not the top. I don't think I said the top, but it is a top, and it might become a top of significance in the short to intermediate term based on many factors. And look at the NYA. The NYA is, where did it go? NYA right there. Dollar NY. Don't forget, you've got Larry Pesavento coming up. I haven't had a chance to do all the commodities things, but he'll probably cover that in great detail in his usual meticulous way. New York Stock Exchange, is this a leg F? But look at that New York Stock Exchange weekly chart. Double top, peak D at 11,105. Peak E at 11,107. That's the Groucho Marx eyebrows. You've got to be careful, because if it goes right down, takes out the wick low of 10,557, that's going to be a real problem. You put it together with Berkshire Hathaway starting a pullback. We don't even know if it's a sell signal yet. It's a lot of things to look at. I'm just going to make it real easy. I don't even want to fuss about it. Follow the volatility index, which we are actually long in my opening call. I believe that this has to be called 1994, 93. This has to be called leg B in the daily chart. It's recycled, and that is very positive. You had a down arrow there. Wow. And we've got an up arrow here. I could be wrong, but I don't know what to call it, because it can't go, well, it could go EFG. G/B. Everything about it so far says I'm going to call it B until things change. If it takes out 17.57 the next 3 days, that means by next week we're looking at a leg C in the weekly chart. We have not had leg C's in the weekly chart for a long time, since April of this year. In the weekly chart. Every other one's failed at a B minus in the 21s. This is something to take. I would be it would be remiss on my part for me not to say that the weekly chart this Friday on 4 o'clock at the close and Monday to Tuesday, going to the end of the month, is going to be so important because of the pattern that I call the H. I can't even show it. I wanted to show it in my CD, Introducing the Chapman Wave Methodology. The lowercase h that can go into a cup formation. It can take you right to the previous highs. And in this case, it would be the highs of the 21, around about 21 to 22. That's something to watch. So I'm just going to make it real simple. That's what we're going to do. My opening call, as I say, it's one of the few times I did it methodically. We went slowly but surely into short positions. Some of them were 200, some of them were 300% short. But I just want you to know that I was doing it in a step-by-step way, and that my subscribers knew exactly the methodology. And I'm completely wrong if there are new recovery highs in the Dow or the S&P over the next week or two. Just make it real simple. Okay. Now, one other thing that I'm going to do before I sign off, I'll be back later today with Tom. But in the meantime, please just be a little careful. You don't have to sell everything. I haven't even got a sell signal on the week.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.